Hello, I'm David Mandy, President of O&M Partners. I want to welcome everyone to the Pure Gold Mining Town Hall webinar. It's an exciting time for Pure Gold, and we certainly appreciate everyone's attendance. Pure Gold Mining trades under the symbol PGM on the TX Venture Exchange. For those new to these broadcasts, about 6 years ago, O&M realized that the shift to investing in ETFs had dramatically reduced non-deal investment demand for individual stocks. We had to cast a wider net to capture potential non-deal buyers outside of the major financial centers. While still serving the investment community, we made the public information way more available to a whole new generation of self-directed investors. Due to our work, doctors and other professionals managing their own money are now receiving information that once used to be geared only to and available only to professional investors. So that's our reason for being. For the questions in the Q&A are for everyone. The broadcast will most likely answer questions you didn't know to ask. Questions will be easily answered by going to the question portal of GoToWebinar or by emailing us. For any questions that remain unanswered, trust us, we'll follow up in a timely manner right after the call. For those who dialed in on your phone, the only way you'll hear our pre-recorded introductory presentation is on your computer speakers. If that's not possible, you'll be able to hear the main presentation after 7 minutes. So please stay tuned. Our introductory speaker today is Greg McCoach, who's the editor of the Mining Spectator. Mr. McCoach has traveled the world of evaluating projects of junior mining companies, visiting over 29 countries. Years of business experience, extensive personal contacts in the mining industry have provided unique insights that have generated an impressive track record for the Mining Spectator since its inception in 2000. Mr. McCoach's philosophy is one of limited government, free markets, unrestricted freedom of speech and thought, and a celebration and defense of individual liberty. Here. So now here's Greg. Thank you.
Hi, my name is Greg McCoach, editor of the Mining Speculator. I've been invited today to do a webinar with Pure Gold, a high-grade gold discovery and soon to be in production story in Red Lake up in Canada. Red Lake's one of the top high-grade mining jurisdictions in the world, if not the most prolific in the world. There's been over 30 million ounces of gold produced up there. I've been involved recently with another discovery, as many of you know, called Great Bear Resources, which is how I came to originally meet Pure Gold. Their discovery was ahead of Great Bear, and in the process of doing my mine site visit, as I always do with these recommendations, I came across Pure Gold. So with that in mind, I'll just do an introduction on several things. I'm only going to take 5 to 6 minutes here. I'll be brief, but to the point on why I think gold is going higher, a little bit more about my connection to Pure Gold through the Great Bear Resources situation, and why I think Pure Gold makes sense as a growth story that has huge upside potential if you believe, as I do, that gold is going to much higher levels. So with that in mind, let me get started with the gold story, where gold is at right now and where I think it's going. First of all, gold's been in a pause, largely, I believe, because the powers that shouldn't be in this world, as I call them, the PTSB, have sat on gold, propping up the dollar for the U.S. elections. It's been a pause. We've had a good year. Gold's run to a new all-time high this past year, almost to $2,100 an ounce. We've backed off some now, but I believe gold is getting ready to launch to a much greater high, a new all-time high, probably in the first and second quarters of 2021. The primary reason I believe this is happening, there's a critical chart that I want to show everybody. It's the M1 money supply. And this is a chart of the last 11 years of M1 in the US. And when governments and central banks turn to creating money the way they've been, we go through three distinct phases. And the first phase is the expansion phase or exponential phase of money growth. You see this in the chart. And then we get into the explosive phase, which has been the last basically 11 years, as shown in this chart, where where the currency being created, M1, is going up in an explosive manner. Well, just recently, within the last month, that chart has just gone parabolic. And this is a major, major thing to understand with regards to how a hyperinflation happens. So we've had the exponential and explosive phases. I believe we are now turning upward into the hyperinflationary phase. This is the end game. This is the death of money as we know it. And gold prices in this environment are going to go much, much higher. Now that this chart has gone parabolic, look at the money that's been created just in the last 9 months with the COVID situation, just in the US alone. Overall, $280 trillion of global debt exists today in our world. This is unsustainable in my view, and this chart that shows that the hyperinflationary phase has begun is real. This is going to be a big factor in what's coming. So I believe gold's going to much, much higher levels, certainly to a new high in the first quarter or two in 2021, but much higher after that. Another point I want to make using another chart to really expound on why I think gold prices are going to go much higher is the example of the German Weimar Republic during the 1923 period, where gold went from 149 marks in 1919 to over 87 trillion marks by 1923. This shows you what happens during a hyperinflationary situation. Remember, I believe that we are just commencing our hyperinflationary phase in the world, a world with global debt of over $280 trillion, right? I mean, this is unsustainable. So gold is moving up, but gold is nowhere near its end game before this is all over. We are going to see crazy high gold prices, just like we saw, I believe, during the German Weimar Republic. So what does that mean for a gold company like Pure Gold? My whole take on Pure Gold was when I first got introduced to them, I was interested and I put them on my follow list because it was a great discovery and a high grade gold camp. I was in that camp for a mine site visit with Great Bear Resources. So I got introduced to the company and started to follow it. Unfortunately, I missed that opportunity. My newsletter is mostly focused on low early stage investment opportunities in exploration stocks like Great Bear that went from 32 cents to currently, $16 and change Canadian. So that was a big win for me. And, that's where the focus of my newsletter is. So a company like Pure Gold that made their discovery already and was moving up and was in the development phase really isn't a stock that I follow too much. But now, with what I believe with higher gold prices, I believe the stock is undervalued for where I think it's going. When you understand the parameters of their discovery and how many ounces are going to be mined at such a high level of profit in the next 12 years, with this story, the combination of the higher gold prices, a bull market that will eventually morph into a super bull market for gold in the next 5 years, I think you have a combination of incredible value right now with Pure Gold as well. So I think what we're going to be is a situation where, as gold moves higher, these kind of growth-oriented stocks that still have plenty of exploration upside, like Pure Gold, they're going to be in a good position. The only knock I see on Pure Gold is the large number of shares outstanding, roughly 394 million. But it's understandable that they have this based on they've built their mine. They're getting ready to produce gold, pour their first gold pour here in December, shortly here in the next couple of weeks. So with that being said, I see them as a company that's going to make tremendous amounts of profit, and they'll have the option if they want to buy back some shares, take some shares out of the market instead of doing a rollback. I don't think the company needs to do that. I'm not advocating for that, but I do believe that they will be in a very solid position to buy some shares back, and that will be very good for their bottom line. Anyway, with that being said, I think I'll turn it over to the other presenters. Glad that I was invited to be here for you, and I will be live with you through the question and answer session in case you have any questions for me. Thanks for having me, everybody. Take care.
Thank you, Greg McCoach, editor of The Mining Speculator. Now it's a pleasure to turn to our host, Darren Lebrans. Darren is the president and CEO. He's a veteran geologist, 25 years in the business. Also, he was the former chief geologist of Placer Dome Campbell Mine, which is next door to Piers Madsen Mine, which is now owned by Goldcorp. Darren co-founded the company with Mark O'Day, who's the director of Pure Gold Mining and founder and chairman of Oxygen Capital. Oxygen Capital companies include Frontier Gold, True Gold, Aurora Energy, Liberty Gold, Sun Metals, and Discovery Metals. It's a real pleasure to turn the call over to Darren.
First, we're going to watch this quick video on Pure Gold, and then we'll have Darren.
In this very place, more than 2.5 billion years ago, before life itself existed, intense heat and pressure from the Earth's mantle caused massive tectonic upheaval. Rivers of fluids and gases flowed upwards, depositing gold where the Earth's crust had cracked and collided, creating one of the richest gold deposits in the entire world. More than 30 million ounces of high-grade gold have already been produced in the Red Lake Gold District, including 2.5 million ounces right here at the original Pure Gold mine. Data from more than 1 million meters of drilling has now delineated this new 7-kilometer-long gold corridor. A corridor with the same rocks, same structure, same geology, and same high-grade gold as the famous Campbell and Red Lake mines located right next door. Since 2015, Pure Gold has discovered more than 2 million new ounces of high-grade gold in this corridor. The first 1 million ounces will start pouring in 2020. I believe this is barely the tip of the iceberg. We continue to discover new high-grade gold all along this corridor, at surface and up to 2 kilometers underground. In less than 5 years, we've defined over 2 million ounces of new gold, and we've only scratched the surface. I believe that this is just the beginning, that significantly more high-grade gold is waiting to be discovered, right here in Canada's Red Lake. We are Pure Gold.
Now it's a pleasure to turn the call over to Darren Lebrans, President and CEO.
Thanks, David. Thanks to everyone on the call as well. I love that video. It gives you a real sense of the scale of what we're looking at here at Pure Gold Mine in Red Lake, Ontario. My name is Darren Lebrenz, President and CEO of Pure Gold Mining, and this is a really exciting day for us at Pure Gold. It's a culmination of 6 years of work, but we announced yesterday that we've introduced ore into our mill, and we will be pouring gold this year. So it's a fantastic day. It's the next chapter of our evolution as a mining company, becoming a producer. And often what happens when you hit this stage is investors and shareholders, they'll ask the obvious question, what's next? And I think what I'd like to do in this presentation is give you a sense of where we're at today. As Greg alluded to in his presentation, we've certainly started production at a perfect time. We've got a constructive rising gold market, particularly when you look at it in Canadian dollar terms. But we've always viewed our asset as a scalable asset. This is our phase 1 mine that we built, and we certainly think that there's a real opportunity here for growth organically on the Pure Gold Mine property. And so I want to give you a sense of that as we walk through the presentation. When you look around the universe in terms of precious metal mining companies and investment opportunities, there's several things you should look for, and we certainly think we have it all here. One is jurisdiction. Located in Canada, especially in Red Lake, Ontario, we've got an area that's seen 100 years of continuous high-grade gold mining, and that certainly speaks to the opportunity in Red Lake and the endowment of the rocks in the region. From a investor perspective, you also want to look at grade. Certainly when you talk about Red Lake, the first thing that comes to mind is high grade, and we'll walk through that as we go into the presentation. But high grade drives opportunities for margins, and we've certainly seen an incredible margin expansion on our own project over the course of the last year as we brought it into production. And finally, you want to have scale and growth, and we have both of those in spades here. So with that, I'll jump right in. I do want to remind everybody listening here that I will be making some forward-looking statements, so I caution you on that, and would ask that you go to our website, www.puregoldmining.ca, for further information. So as I introduced it, it is a really exciting time. We've got our first 1 million ounces of high-grade gold that's started going through the mill, and we'll be pouring our first gold bar here in the coming days. So it's truly an exciting period in the evolution of Pure Gold Mining. The site itself is it's a historical site. It's a brownfield site, as we say in the industry, which means that it's seen previous exploration and production. In our case, the former Madsen mine produced 2.5 million ounces of gold at a diluted head grade of about 10 grams per ton over the course of a 36-year continuous operating period. We acquired the project about 6 years ago. Between myself and co-founder Mark O'Day, we consolidated the land position, and we assembled a top-notch team. In fact, I would argue the strongest team in Red Lake geology to work with what was a very extensive data set to build some ideas, test those ideas, and we've had great success. Over the course of the last several years, we've drilled about 300,000 meters of drilling along a 7-kilometer long mineral system. We've made several new discoveries, and we've built up a 2.1 million ounce indicated resource at 9 grams per ton, and a further 500,000 ounces of inferred resources at 8 grams per ton. About 2.5 years ago, we made a decision to move the project quickly to cash flow. And so we took a portion of that mineral resource and we subjected it to a feasibility study, which we released early last year. That showed positive economics at a $1,275 per ounce gold price. And so we initiated construction, and with that now completed, we're just on the cusp of production. So to talk a little bit more about the team, myself and Mark O'Day both really got our starts in the Red Lake area. I was, for about half of my career, I worked with a company called Placer Dome, a senior producer, and that took me through the Red Lake area, where I worked underground as a beat geologist and then ultimately acted as chief geologist at the Campbell mine, which is now part of the Red Lake mine operation. Mark worked for Rob McEwen over at Goldcorp. In fact, he was a second place finisher in the infamous Goldcorp challenge that was launched in the early 2000s, looking to discover the next high grade zone in the Red Lake mine. When you look at the board of management team here, there's 6 of us that have deep experience in the Red Lake camp, over 10 projects and 135 years of collected experience. And I think that's been really instrumental in our success thus far. As we transition into an operating producing company, we built out our operational team. You can see several names on the right-hand side. today we're about 200 employees on site, on a path to about 250 by the time we expect to reach commercial production end of Q1 next year. And so to give you a sense of, you know, the depth of experience across the management team, we pulled this group of names on the screen here for those collective experiences, and you can see them on the screen here. The green circles represent deposits that our team has found across the world. Many of these have turned into mines. In orange, there's 33 mines that we've collectively built, and you can see the blue dots represent 68 operations across the world that we play key roles in managing and operating. And so I think our team is really well suited to manage that transition from exploration through development and now into production. So for those of you that haven't been to the Red Lake area, this is a picture taken out by the airports in the area coming back towards the Red Lake mine operation. And you can see some of the benefits of jurisdiction, if you will. Red Lake itself is a community of about 4,500 to 5,000 individuals. As I indicated earlier, there's been 100 years of continuous high-grade underground mining in the area. And as such, we've got a well-established pool of highly skilled individuals who've not only worked at mines but had generations working at the mines in the area, and all the services that go to support it as well. You can see a provincial highway that runs through the municipality of Red Lake and out to our mine site. There's grid power here, which is generated a hydroelectric station just south of the Red Lake area. And so again, well established with respect to labor, roads, power, and other infrastructure and services. In the background here, you can see a couple of head frames and a milling facility. This was once known as the Campbell Mine. That's where I worked in the mid-1990s. And it's now part of the Red Lake mine operation, which was bought earlier this year by Evolution Mining out of Australia. Those deposits start at surface, and over the course of 75 continuous years of mining since the mid-1940s, they've produced 25 million ounces of gold, and they're currently mining at a depth of about 2.5 kilometers below surface. So that's something that's actually quite common in Archean deposits, not only in Red Lake but across the world. Is, you know, often they're volumetrically smaller, they're high grade though, so they pack a really big punch, and they typically have very deep roots. And so that's absolutely the case here with a mining operation that we're looking at here that's being mined down to a depth of 2.5 kilometers or more than 1.5 miles. And you step across to our own operation, we certainly think we have that same potential. So 20 kilometers down the road, you're at our mine gate, and what we're looking at here is our own property. You can see a head frame that sits on top of a shaft that goes down 1,200 meters. This picture is taken from the milling facility looking back towards the administration complex. The deposit itself runs left to right across this image. It's again an underground deposit, and we're currently active in a existing ramp and portal that we put in about 500 meters to the left of this image, and we've just announced that we've colored a second ramp that'll sit about 500 meters to the right. That provides opportunities for improved productivity, improved production, and really sets us up for expansion down the road. In production, this is going to be one of the highest grade mines in the planet, and a lot of people talk about high grade, and it's defined in many different ways, but to give you a sense of how we rank worldwide, in production, we expect to be the 4th highest grade mine in Canada and the 16th highest grade mine in the world, which really puts us about 95th percentile worldwide. And that translates into a low unit cost structure, as we can see on the screen here. So over the 12-year phase 1 mine life, we're looking at the average all-in sustaining costs of $787 an ounce. And with gold now trading close to $1,900 an ounce, you can see we have a margin of well over 100% on every ounce produced. In fact, with the numbers we're showing here, we're at $1,800 US per ounce, and we're showing a margin of $1,000 per ounce US, or 1350 Canadian. And so we really do benefit from this margin expansion we've seen over the course of the last year. But again, being in Canada with a weaker Canadian dollar and all of our costs incurred in Canadian dollars, it lends itself to an even higher margin in Canadian dollars. Give you a sense of some of the changes that have happened over the course of the last year. This is within our milling facility. So I said it's a brownfield site. There was an existing plant in place that really
Scott, we have frozen, or is that just me?
No, I think Darren, you may have frozen. I'm going to see if we can reboot you real quick.
Thanks everyone for your patience.
Underground, so it comes across from the underground to a loading pocket at the base of the shaft. From that loading pocket, it goes up a new conveyor, runs up into the milling facility and into the SAG mill. From the SAG mill, it runs into the ball mill, which you see here, out to the gravity circuit, which recovers free gold from the system. We do anticipate getting about somewhere in the order of 30 to 45% of our gold being reporting out into the gravity circuit. From there, it goes out into the thickener. There's a series of leach tanks that are outside of this building through a CIP circuit into a brand new gold room where we pour doré through electrowinning. On the back end, we run through both a detoxification circuit, which will clean the water before discharging to our tailings management facility, as well as a backfill plant that will bring the tails to underground for some of our cut and fill mining. As part of our development period here, we've also commissioned a new substation. This replaces a 1950s vintage substation on the property. This will provide power both to the milling facility but also to the underground, and of course it's been fully commissioned. So step in now for a moment and talk about growth and give you a sense of what we're seeing in the Red Lake area. This is the geological image, if you will. It's a plan map which shows the geology, and I'm not going to dive into any details, but I will highlight where the Red Lake mine sits, owned by Evolution Mining, and where we sit down in the south end of the camp. Our property is outlined with the gold coloring. It's 47 square kilometers of patented ground. And if you notice, it straddles a contact between green and yellow rocks. That contact runs through the camp and really is a key feature for localizing high-grade gold mineralization in the Red Lake area. You can think of it as a big fault zone, a big crack that taps deeply into the earth, and that's where the fluids would have come up to form deposits. Those fluids interact with the reactive rocks that we see in the green. We call it the bomber assemblage. And so when you look at 30 million ounces of historic gold production in the Red Lake area, it really all comes from within a couple of kilometers of that contact, and generally within the bomber assemblage or the green that we see on the screen here. If we take a look at the two operations side by side, you get a sense of how they compare with respect to each other. They both start at surface. On the right, we're showing the Red Lake mine operation down to a depth of 2.5 kilometers. And on the left, you can see our own Pure Gold mine, which again starts at surface and has been defined to a depth of about 1.2 kilometers. Surface expression is very similar. And when you think about the Red Lake mine operation, it didn't always look like this. We're showing what's been mined over the course of 75 years of continuous mining. And so if you step back to the mid-90s when I worked there, it would have looked quite similar to what we're showing on the left-hand side. I do want to highlight here, if you can follow my cursor, this deepest part of the Red Lake mine, where it goes down to 2.5 kilometers. That's known as the high-grade zone. The high-grade zone was discovered by Rob McEwen in the mid-1990s, late 1990s, and it really was a disruptive, transformative event for Goldcorp. At the time, Goldcorp was a smaller producer, producing about 50,000 ounces of gold per year, and with that discovery, they hit over 2 ounces per ton. And to date, it's produced 6 million ounces. It changed Goldcorp overnight from a 50,000 ounce producer to over 500,000 ounces of production. And that was with no change to the mill. So you can see there's two ways to drive your productivity or your ounce profile across a period. One is to expand the mill and put more tons through, or you can find higher grade material and put that through. And that's exactly what happened with Goldcorp, ultimately transforming them into a 35 to $45 billion company at their peak. Back at the Pure Gold mine, we have something known as the 8th zone. It's highlighted here, and the 8th zone is our own high-grade zone. It sits in a similar geological environment. Indicated resource of 21 grams per ton, so it's more than double the grade of our overall resources and reserves. And importantly, it's completely open for expansion. And so it's an area that we're really excited about getting underground and mining, but also continuing to drill to grow that opportunity for disruptive growth. Over the course of time, this cartoon shows how we see things evolving at the Pure Gold site. We have, as I indicated, base of resources and reserves at 1,200 meters. But we've got a single deep drill hole that anchors the deposit at 2.1 kilometers below surface. So again, thinking about the deep-rooted nature of these deposits, we see a real opportunity over time to continue to drill down plunge on the main deposit and expand the overall resource and production, extending the mine life and providing opportunities for expansion. So zooming in here to our own property, what we've done here is we've color-coded the resources and reserves. We've projected them to surface and color-coded them according to their phase, if you will. And so the red here is our phase 1 mine. That's our 1 million ounce reserves at 9 grams per ton. And the pink colors, Fork, Wedge, and Russet South, these are discoveries that we've made over the course of the last few years that were not considered as a feasibility study, but areas where we have defined resources, we continue to drill, looking to grow those resources and ultimately layer them on top of the mine plan, potentially through an expansion of the plant. To speak to scale, from the bottom left to the top right, that's 7 kilometers. So this is a big mineral system in place here. This mineralized corridor has great continuity along it. And finally, to talk to grade, Fork, Wedge, Russet South, there's drill hole callouts here under phase 2 that speak to the high grade nature of those discoveries. They sit right at surface. Again, they're open for expansion. But I do want to really call out the 8 zone again. You can see here some of the grades: 4.3 meters at 466 grams per ton, 5.5 at 342, 8 at 120. It includes smaller subintervals that run into the thousands of grams per ton, and that's what gets us excited. You can see the 8 zone is a unique high-grade component of the mineral system that we have in place at the Pure Gold mine, and provides a real opportunity for that disruptive discovery. So the next image is going to be a long section again. So if you draw a line from the bottom left corner to the top right along this mineralized corridor, and you imagine yourself standing down at the bottom right looking back at it, it would look like this. And so what we've done here is every drill hole intercept that crosses that plane, we've put it on the image here and color-coded it by grade. And so the magenta dots there, those pink dots, are 10 grams per ton or higher. And so I can speak to all the same features again from a scale perspective. Your left to right, your 10 kilometers or about 6 to 7 miles of extent here, runs from surface down to a depth of 1,200 meters, very robust, defined by, in fact, over 14,000 intercepts that grade 10 grams per ton or higher. You can see that base of drilling here that defines the bottom of our reserves, and the deep drill hole, 14.3 grams per ton over 2 meters, that sits about a kilometer down plunge below the base of our reserves. This white space is a real opportunity to substantially add ounces to the overall resource. Moving to the left, you can see our 8 zone. It sits right here. It's back into the page, so to speak, and again, completely undrilled below it, but also open up back towards surface where we have our Russet South discovery. Last year, we put a couple drill holes through into the area we call the gap between 8 zone and Russet South, and we hit 50-meter zone of anomalous altered rock with narrow, what we call blue-gray quartz veins, exactly the same thing that hosts gold in the 8 zone and at Russet South. And in fact, we intersected a meter of ore grade mineralization within that. So we've hit the structure. We've had success tracing it several hundred meters above the 8 zone and below the Russet South area. And in fact, this is an area that we're currently targeting to continue to build that opportunity back between the two. Moving left, you have the Fork and Wedge discoveries from surface down to a depth of about 300 to 500 meters and still open beyond that. And so our vision of how this grows over time is stylized here on the screen, with the main part of the deposit continuing down plunge, the 8 zone open down below, but also back up towards surface, and Fork and Wedge having a reversal of orientation as we take the structure across folded rocks and it points in the opposite direction. If you think about the phased mining approach we're taking, our phase 1 mine sits in the heart here. We're currently down about 250 meters in the ramp on the main part of the deposit. Phase 2, if you imagine, is layering on Fork, Wedge, and expansion within that phase 1 mine. And then the third phase and fourth phase would be defining the deposits down plunge to build that longevity. So to that end, we're very active on the exploration front. And it's not often when you're, come through a capital spend, you're on the cusp of production, that you're also continuing an aggressive exploration program, but we are doing exactly that. We've had 2 surface rigs that have been turning since about mid-July, and those will continue through next year, as well as an underground one plus underground drills as well. And the goals of these programs really are fairly simple to understand. We're looking to infill, expand, convert resources to reserves within that phase 1 mine. We're looking to grow those discoveries where we see an opportunity for an expanded mine plan. And then third, really looking to tap into that transformative potential of high grade like the 8 zone that we see underground in the phase 1 deposit. Just a highlight on the right side, this is an image of folded gold vein from our deposit. In fact, this drill hole sits about 1,300 meters below surface. It's the deepest drill hole that we have in our resources and reserves, and kind of speaks to that open opportunity down at the bottom of the deposit. So again, this is very much a phased approach to building out the mine. We're really excited about coming into production, developing strong cash flow right out of the gate, and that will self-finance ongoing exploration and growth, where we see an opportunity to grow from 100,000 ounce per year producer into that 150 to 200,000 ounces plus with expansion of the overall resource and mine. And so there really are some what we call low-hanging fruit, real near-term opportunities for us at Pure Gold. We are updating our geological model right now, looking to revise our mineral resource. It'll come out in the first half of next year. That will incorporate about 400 drill holes completed since the last update. And so I'm excited about that milestone. On the mining front, I talked about the second ramp that we put in. The ramps are going with larger openings. They're 5 by 5 meters in the east portal and ramp that allows us to transition from mid 20 ton to mid 30 ton trucks, which drives improved productivity. You can think of those two ramps as separate mining centers. So again, it allows you to have more working faces and more productivity, ultimately driving towards a larger production profile. Another opportunity that we're considering right now is the cutoff grade. Obviously, our cutoff grade for the feasibility study was defined at $12.75 US per ounce. It incorporates all of the operating costs, sustaining capital, a measure for profit. And clearly, we're not going to put lower grade material through our mill. But in the concept of expansion, we can start thinking about what the actual cutoff grade, which is closer to 3 grams per ton, and allows you to think about more tons, lower cost mining methodology, and it kind of feeds on itself to feed that expanded case. And I've talked a little bit about exploration and the opportunities there, which we think are tremendous. I do want to touch on some of the environmental, social, governance, themes for Pure Gold. This is a brownfield site. It has a historical mine that operated on from the mid-1930s to the mid-1970s. Things were operated very differently in that time, and we've taken a much different approach, obviously, to modernize the site with the introduction of a detoxification circuit with the effluent from the mill going through that before hitting the tailings management facility. Brand new water treatment plant to treat the water to water quality objectives before it's discharged to the environment. A phased closeout plan that sees successive cells in the tailings management facility being capped and revegetated as we're mining, and really remediating some of the legacy issues of the past, all the way through the exploration phase and into the operations phase. This approach has garnered a lot of support within the local community, within the regulators, and within our First Nation partners. And so I'm really proud of some of the work that we've done and that we continue to do moving forward. Just a shot here on the left of and right of the water treatment plant that's gone into place that will treat the water for ammonia, part of the processing system, and it'll also remove heavy metals before discharge. It is a very simple and very clean ore body, and so we're fortunate that there's very little that needs to be treated prior to discharge. So with first ore to the mill announced yesterday, we were on plan, we're on schedule, we built it in budget. I'm really proud of the work the team has done to do so, particularly when you consider the challenges and the unique challenges that 2020 presented to all of us. It's just a thrill to be standing here with the first gold pour just days away with the work that we've done over the course of this last year. And we couldn't have done it without the support of some key shareholders. So you can see on the screen here, this group holds over 30% of Pure Gold. Legendary investor, Mr. Eric Sprott, is a $30 million investment, really driving us towards production, but importantly towards the growth that we share, that vision for disruptive, transformative discovery and the real high grade that is so clearly present on our property. And two senior producers, AngloGold Ashanti and Newmont, #1 and #3 gold producers in the world, AngloGold recently exercised warrants and ahead of their vesting date, and that put them at 16% shareholder. They've been supportive shareholder from day one. So with that, David, I'll open it up for questions.
Thank you, Darren. As always, very well presented. We'll start with Murray today, Murray Vanderbilt. Max, do you have a question for Darren today? Great to have you on the call. It's just unmuting. Takes a moment.
Maybe we circle back to him. I did send him an unmute request.
Terrific. What? Dale.
Dale?
We can hear you, Jim.
Oh, good. Darren, how are you?
Good, how are you doing?
In your strategic holders, I didn't see Mr. McEwen's name up there. Is he no longer involved?
No, I certainly think he is. He was the lead investor when we acquired the project back in 2014. You know, obviously as founder of Goldcorp, he knows the area as well as anybody out there. In fact, both Mark and I presented to him last year, and it was really interesting, particularly when we looked at the long section between the Red Lake mine and the Pure Gold mine. Rob himself commented on the striking similarity in terms of the geometry of the two on long section. Really, when you look at it, what I've shown, and there are people that report, and so there's a reporting threshold that doesn't meet, and so I believe he's still a shareholder, but I can't confirm that through reporting.
Okay, well, thank you so much.
Mm-hmm.
Thanks, Jim. Being on the call, we'll turn to Howie Flinker. Howie, any questions today?
Hey, Darren.
Hey, Howie.
I got some questions. How much were exploratory expenditures, acquisitive expenditures, and CapEx, and in which currency also?
Yeah, so we're just reaching completion of the project. In Canadian dollar terms, we have $58 million in cash today. We have a fully funded exploration budget that started back in July. Will carry through next year of 15 million Canadian dollars. We've modeled out our cash flow through next year, and we have a pretty strong working capital buffer that sits 30 million Canadian dollars plus at the lowest point of cash, which will come towards the end of Q1 next year. Sustaining capital for next year is projected to be in and around the $8 million range, but that's all captured in that working capital assessment. So, you know, very strong financially right now as we transition into production and have the balance sheet to continue to explore through this period.
I meant the historical numbers altogether.
Oh, in terms of what we put in?
Yeah.
Including the acquisition, we've by the end of this year, we will have expended about $230 million.
So 230 would be 180 or so US.
Correct.
And your resource, I forget, how much is that?
So we're 2.5 million ounces, 2.1 million ounces indicated, and 0.5 million ounces inferred.
Okay, so that's about $75 an ounce. 75 into 180.
Mm-hmm.
So your total costs, all in, including interest and G&A, might be about $900 US, correct?
Mm-hmm.
Therefore, at 16 or 1700, you would make $700 or $800 an ounce pre-tax, correct?
Right. Now, bear in mind, the mine's fully built now.
Yeah.
Cash flow, and we certainly see a lot of opportunities to grow here.
Yeah, I understand. So $700 or $800 times 100,000 ounces is $70 or $80 million pre-tax profit, real economy, which would give you $50 to $60 million, maybe $52 to $62 million of post-tax profit. Is it 300 million shares?
390.
Oh, closer to 400.
Yeah.
I see. So that's about 15 cents a share, give or take, profit. Okay, US.
Correct.
Or yeah, 20-ish Canadian. In the upcoming year, if we theoretically start your mine on January 1st. Okay. I just wanted to know those numbers. Thanks.
You bet.
Thank you, Howie. We'll turn to Heinz Thoma.
Darren, thanks for the update. So next year you expect roughly 100,000 ounces production, or it's going to be a bit less? What do you think?
It will be less. We haven't put out any guidance yet, so if you look at the feasibility study, we're somewhere in the order of 67,000 ounces next year. The top part of the mine is a little bit lower grade, but I would say that the mine plan has changed quite dramatically since the feasibility study. So we'll give updated guidance towards the end of next year. We ramp up fairly quickly to 100,000 plus ounces as we hit higher grade material.
And when do we expect that new resource report?
So it'll be the first half of next year, pushing to get it out towards the end of Q1.
Okay. Thank you.
Yep.
Thank you, Heinz. Let's turn to our introductory speaker today, Greg McCoach. Greg, question today.
I think I unmuted. Am I here?
We can hear you, Greg.
Great. Hey, Darren, great presentation. Really enjoyed it. You guys are well on your way. I would just, look at the whole picture with gold. I just want to let people know that with much higher prices, even at current prices, all the producers are making a ton of dough. There's going to be a huge M&A activity starting, I think, in 2021. At some point, you're going to be, along with another company like Great Bear that's not as far along as you are, they're going to be real attractive as takeover targets. So do you have any plan for that? With that said, are you looking at the potential of a takeover at some point?
Yeah, I mean, obviously I can't comment too much on that, but I mean, you're right. You got strong metal prices right now. Most of the companies out there have been cleaning up their balance sheets over the course of the last several years, and there's not a whole lot that's happened this year, and I think COVID plays into that, the inability to travel and complete due diligence. As we round the corner, I think that will change, and everything we like about the area is going to be attractive to the whole universe of mining companies, the jurisdiction, opportunity for grade, strong margins, scale and growth. Those are all extremely important. From our perspective, we see real value creation here with the inclusion of resources outside of reserves, the opportunities for expansion by following a phased approach. And really our goal through next year is to, obviously establish the stable cash flow, but to really convey to the market that growth. And that's something we'll be working pretty hard towards.
Yeah, and I would just, to any listeners, anybody who's interested in pure gold, this is as good as it gets. I've traveled the world looking at these projects over the years, and the high grade jurisdiction, all the infrastructure right there, all the labor right there. For somebody, a big gold producer that wants to add more ounces to their bottom line, the gold mining business, it's like a tank with a slow leak. The more you produce, the faster your tank leaks, right? So they have to keep replenishing reserves. And you guys are as good as it gets, in my view. It's anybody that has high grade matters. The grade gives you so many other options. And when people are looking to buy, the big gold producers are looking to buy a current resource or a current producer that's smaller than them, grade makes a huge difference. So I'll leave it at that. Thanks so much for your presentation.
Thanks for the comments, Greg, and for the introduction.
Thank you, Greg. We'll turn to Doug Loud. Doug.
This is fascinating. I love what I'm seeing, but I always have to ask my two favorite questions. You keep talking about expansion. You have all the permits. Is everything all in line with the First Nations? Can you get bigger without having to get more permits and more First Nations clearance?
No, obviously we're fully permitted and have a project agreement with First Nations in place for the production that we've just started. For any kind of expansion, you would have to go through a process there of permitting that expansion.
How much expansion would you have to have in order to re-permit? He's frozen again.
Oh, 1 second. Darren, can you hear us? Here we go.
I saw my mic dropped off again there. I don't know where I dropped off.
You were just answering Doug. I'm gonna share your webcam again.
Doug
If you
Doug
could.
just asked the question. Doug, you
I
want to?
just wanted to know how much more production would you have to want to do to get a different permit, and how long would it take?
I mean, those are kind of open-ended questions. I think the way I would answer that is we need to do the work to really determine, you know, what the right size is. And so, you know, understanding how big the resources are outside the footprint of our phase 1 mine, understanding what kind of productivity we can get from the existing reserves and resources through changes in the mine plan, changes in cutoff. There's a lot of work to do there on both the exploration and engineering front that will ultimately determine what the right scale is, what the right size is, and then that'll help you answer the questions as to how much work and how much time is required to amend those permits.
So you're all set for the 100,000 ounces plus a year.
Sorry?
You're all set to do your production of 100,000 ounces a year.
Yeah.
That's great. Thank you very much.
You bet.
We'll turn to Dave Kranzler. Dave, good to have you on the call.
Can you hear me?
Yeah, Dave.
Okay, yeah, it's good to be on the call. I've thought this was a great story since June 2016, which is when I first presented it in my mining stock journal and put shares in my fund. So, I mean, it hasn't been Tesla, but it's been a great investment and much lower risk than Tesla. Just a couple of questions. Have you thought about maybe expanding the processing capabilities, expanding the size of the mill, and pulling forward production?
Yeah, so I think when you think about kind of the approach we've taken, you got to step back several years, and you know we had made pretty material discoveries. You know, some of the first results of the wedge zone were truly outstanding, and weren't really getting the market recognition, as you know, through that period because it was a down part of the cycle. And so we made a conscious decision to move quickly to cash flow. We were able to do so because of our location, because it's a brownfield site, and so when we worked on our feasibility study, the two drivers for us were, one, let's get it into cash flow. So that's this phased approach, and two, let's keep the capital low. And so those were the drivers, the kind of the key parameters that were driving our feasibility study, if you will. We've always thought about this as something that could be expanded. And so when you look at Fork, Wedge, Russet South, these are resources right at surface that are open, and you know, there's opportunities there to mine them concurrently, bring them through an expanded plant. And then, as I kind of touched on, you know, even when you look at the phase 1 mine, you think about it in the context of today's metal price environment, you know, as you start to look at it with that light on, you see shapes that are larger, they're more continuous, they lend themselves to lower cost mining methodology. The larger ramp, the second ramp we put in, these are all kind of designed around setting ourselves up for that potential expansion. And so, yeah, absolutely, you know, we've been thinking about expanding the plant, we've been thinking about expanding the mine, and we've been doing work in the background to kind of drive that path. So we're sitting here today benefiting from, you know, the only mine in Canada to come on stream this year, the strong cash flow we're going to see out of the metal prices we're looking at today, and an opportunity to continue to grow and demonstrate that growth to the market.
Great. What percentage of the stock does Anglo Asante own?
16%.
16%. So I'm assuming there will be a bid from Anglo for Pure Gold probably in the next 12 months.
No comment.
No, that's all I got. Thanks, I appreciate it, and I know my subscribers are very happy with the performance of the shares, especially lately.
Thanks so much, Dave.
Thank you, Dave, being on the call. We'll turn to Chesley Morton. Chesley.
Okay. First of all, congratulations on achieving your production milestone. And then secondly, with regard to your legacy tailings, anything of value there at $1,900 gold or $2,500 gold?
Well, I think the great thing about the deposit is that it is a simple ore body from a metallurgical perspective. And so as a consequence, even when you look at that historical mining, the recoveries were very strong. And so there aren't really any opportunities there in the existing tails that would pay for the disruption of those tails. So it's not something that we're looking at now.
That's right. You disturb it, you've got a new environmental issue there as well. What was the number on your expected recovery?
96% on average.
Okay, that's great. And then finally, you mentioned lowering your cutoff grade. So what effect would that have on your mine life?
Well, so we wouldn't do that in the context of the existing plant. And what I mean by that is, you know, obviously today when you look at the look at the metal price today and you do the work, our cutoff grade moves from 4.75 grams per ton, which is what it is for most of the deposit, down to something a lot closer to 3 grams per ton. But if you don't change your plant, you would extend your mine life, sure, but you're gonna be putting lower grade material through, generating less ounces, generating less profit. So it's not something that we're looking at doing right away. There may be some opportunities to stockpile lower grade material that retains those ounces for future production, and where we can do that, we will. But where it really becomes interesting is when you start thinking about expanding the plant, and then you can start looking at, okay, what does that do to my existing mining shapes? And as I highlighted, they obviously they get more tons, but there's opportunities there for geometries that present themselves to lower cost mining. And so understanding that relationship is going to be really important in terms of kind of right sizing this mining operation.
Are there aspects to your plant that you could expand in a modular fashion, or do you just have to build a side-by-side sort of thing?
No, I believe so. It's something that you know, obviously we need to do a lot of work on the engineering front to understand exactly what could be done. But you know, you can look at ways of driving a grinding circuit, a gravity circuit, maybe the thickener in parallel, and that way it becomes less disruptive when you tie it back into the overall system. Obviously, you'd have to add to the leach circuit and the CIP circuit and maybe do some work on the elution circuit as well. But I think there's ways to look at this where you can expand it almost in a modular fashion, and in particular to not disrupt too much.
Okay. Well, listen, it's an exciting story. I look forward to the upcoming news.
Thank you, Chesley.
Thank you, Chesley, as always. We're going to try Murray one more time to unmute because his questions are always great. Murray, can you unmute? Okay, we're going to turn to Scott for questions from the audience.
Okay, and Murray, if you can unmute or send in a chat message, we can certainly answer your question. The first question is, what are your plans for listing in the United States in an exchange?
Yeah, so no current plans. We obviously are listed in Toronto, TSX Venture as PGM. We have a full London Stock Exchange listing as PUR. Obviously, as we grow and evolve as a company, it's something we'll continuously evaluate for listing. But you know, our focus right now has been on execution and bringing into production. And you know, those decisions are something we'll continue to look at it over the course of the next years.
Thank you. Next question. First, a big congratulations to the fantastic crew at PGM. You are all worth our admiration. Amazing people. Question number one, the current resource estimate was released February 2019, and from the cutoff day of that estimate, how many more meters and holes of drilling will the new resource estimate include?
Yeah, so we're somewhere in the order of plus 400 holes and 60,000 meters of drilling. So that's the kind of information you can expect to be incorporated in the next update.
And a follow-up question from that same individual. Will any part of the upcoming drilling of the 8th zone be included, or will these results come at a later date?
Yeah, they'll come at a later date. We are, you know, obviously we've been looking at, and we'll continue to look at up dip of the 8th zone, you know, kind of in that gap area as we call it. True drilling of the 8th zone, you know, probably about a year out from now, we'll be deep enough underground to set ourselves up to start testing the extents of the 8th zone from underground. And obviously, you know, it's something that's much more cost effective from that platform.
Great, thank you. Another question, how do you see Pure Gold's entry into the GDXJ, pro or con?
I think it's a fantastic change, if you will. We're really excited about being included in the GDXJ. It obviously raises the profile of the company. It recognizes the increasing liquidity that we've seen over the course of the last year, and you know, obviously as gold prices improve and we see more investment into the sector, it will correspond in more investment in Pure Gold, and so I think that's real positive. You know, it can go the other way as well, but we're thrilled to be in the GDXJ.
Thank you. Another question, have you considered sinking a shaft to be able to do some diamond drilling below the 1,000 meter mark?
So not at this time, no. We do have an existing shaft that goes down to 1,200 meters, and so I've talked about ramps that we're working in actively, and we'll continue to drive those ramps down the plunge line of the deposit. As we're doing that, we are dewatering from the existing shaft. We are rehabbing that shaft, and so you know, the time's going to come fairly quickly here where we now start to incorporate a new hoisting system for the existing shaft. And what you can conceptually imagine is you're going to see men and materials going via the ramp. It allows you productivity with larger equipment, larger trucks, scoops, etc. Modern mine environment, and then we can bring that to an ore pocket and hoist it up the shaft. And so that's kind of the hybrid conventional system that we're looking at here as we move forward.
Thank you. And final question from the audience, and please audience, if you have more questions, please send them in to us. We'll make sure to get them to management and get answers to you. But the final question is, with significant milestone and major change in NAV from explorer company to producer, how do you see the market reacting going forward?
Yeah, so I think, you know, obviously we've seen a bit of a re-rate as we come into production, and we've benefited from a rising gold market as well. And, you know, part of it's going to be your view on where gold's moving from here. I certainly feel pretty good about where we're at today. As Greg indicated in the introduction, I think there's a lot of room for gold to continue to move upwards, and I think we'll benefit from that. Importantly, I think that, you know, effectively the way you can think of it is you're getting cash flow, you're getting an operating mine, a producing company for your investment today, but you're investing in the growth. And so, you know, when I talk about 1 million ounce reserves from a larger resource, when I talk about discoveries outside of our existing reserves, when we talk about the opportunity for that disruptive high-grade discovery, you know, through expansion of the 8 zone, discovery of new 8 zones along that parallel structure, I think that's the real opportunity for value creation and growth here moving forward. And so when you look at the next year, you know, we're going to have ongoing drilling that's going to go through the course of the year. We're going to have an updated mineral resource that comes out in the first half of next year, and we're looking to convey the market and crystallize that opportunity for expansion of the resource and reserves, expansion of the production profile, and what that looks like. And so I think that's something that's going to really drive our value here moving forward.
Thank you, Darren. That's the questions from the audience.
Thank you,
Darren. Thank you, Darren. Forthright as always. Really appreciate the presentation today and appreciate everybody in attendance. I'm going to turn back to you, Darren, for closing remarks.
All right, well, thanks again to O&M for hosting, for Greg for the introduction, and to all of the audience members. I'm really pleased to be presenting today. It's a real exciting time for Pure Gold. We've just crossed an important milestone as we've delivered the first ore to the mill. First gold pour is just around the corner, and so it's an exciting time as we transition into producer. I think the real excitement here is still to come with ongoing growth opportunities, and building out that picture is something that it's going to be a real focus of ours next year. And so I look forward to speaking to each of you again next year. And just in signing off, I'd like to wish everyone a happy holidays and all the best for 2021.
Thank you, Darren. Thank you, everyone. I want to mention Adrian O'Brien handles investor relations and communication and would be a good person if you need to follow up. Again, thank you, everyone, for your attendance, and I wish you a very pleasant evening.